Lars, Tveit, and I have made 25 predictions for 2025. If you'd like to check them all out, just click the timestamp above to watch the full video. One of our predictions focuses on how the stock markets might perform in 2025. To arrive at our conclusions, we've drawn on 4,000 expert forecasts from the Supertrends platform, plus a mountain of data and AI insights. Of course, when it comes to stock markets, nothing is ever certain.
So the first question we get a lot is a really difficult one to predict as well. So it's about the Nasdaq index. Do we think that it will exceed 22,000 within 2025? So Lars, what do you think?
Well, that's about 10% higher than we are today. So I think it's quite likely that we get a meaningful correction, but also that it goes higher at some point. And the reason is that if we have falling interest rates and a fairly good geopolitical situation, fairly high growth in the US, which I think all are plausible outcomes, then we could get the beginning of a run up to a bubble. So I don't think it's a bubble now, but it might become a bubble over the next years. So yeah, I would say likely.
The S&P 500 is a broad market index that tracks 500 of the largest publicly traded US companies, spanning sectors like finance, healthcare, consumer goods, and more. The Nasdaq Composite, on the other hand, focuses heavily on technology firms. Think Apple, Amazon, Microsoft, Tesla, and others leading the charge in innovation. Over the past 12 months, both indices have seen remarkable growth. The S&P 500 climbed from below 4,700 to nearly 6,000, reflecting strong performance across a wide array of industries. Meanwhile, the Nasdaq jumped from around 14,500 to roughly 19,600. A surge fueled by booming tech stocks, especially those tied to AI, cloud computing, and e-commerce. Heavyweights like Apple, Amazon, Microsoft, and Nvidia have been standout contributors, driving up valuations and boosting overall market optimism. These gains suggest investors have increasing confidence in both established blue-chip companies and fast-growing technology leaders. Of course, market movements can shift quickly due to economic indicators or global events, but for now, the upward trajectory signals a positive outlook across much of the US stock market, especially when it comes to innovation and digital transformation. Looking ahead to 2025, it seems like most of the big financial institutions are feeling pretty good about the stock market. They're forecasting some solid growth for the S&P 500, with predictions ranging from around 10% to even 20% gains. This is actually quite a bit more bullish than what they were saying for 2024. For example, Goldman Sachs was only expecting the S&P 500 to reach 5,200 this year, which is a much smaller increase. So why are they so optimistic about 2025? Well, names like Goldman Sachs, Morgan Stanley, JP Morgan, they're all expecting the economy to stay strong, with companies continuing to rake in profits. And that usually means good things for stock prices. Some are even more bullish, like Oppenheimer, who think the market could climb above 7,000. They're especially excited about the potential of things like AI to really supercharge growth. However, it's worth noting that not everyone is quite so optimistic. Stifel, for instance, is a bit more cautious. They're a bit worried about rising interest rates potentially putting the brakes on the economy. And then there's BCA Research. They're the real outliers here. They actually think the market could take a pretty big hit, falling all the way down to 4,450. They're concerned about a recession hitting, and they think the Federal Reserve might be too slow to react if things start to go bad. Of course, no one can say for sure what will happen. These are just educated guesses, and it's important to take them with a grain of salt. However, most major players in the industry remain very optimistic about the stock market growth, which is interesting to see. The S&P 500's performance, after a year of exceptional gains, offers a compelling glimpse into market dynamics. While history isn't a perfect predictor, it reveals insightful patterns. Examining years with 25% plus S&P 500 gains and record highs, we see a nuanced picture. Sometimes momentum explodes, like in the 1950s post-war boom or the late 1990s tech bubble. More often, growth moderates, as seen in 2003 and the 2010 S. This variability stems from various factors: economic conditions, interest rates, and investor sentiment. The 2020 pandemic year, with its unprecedented stimulus, defied expectations. Crucially, past performance isn't a future guarantee. Each market cycle is unique. However, history reveals that the S&P 500 typically outperforms its average in the year after a 25% plus surge. This suggests that the forces driving strong performance often carry it forward. While the degree of gain varies, the tendency towards continued growth is clear, considering this historical trend alongside current economic indicators and investor sentiment. The case for further growth in 2025 is compelling. Informed decisions require a careful analysis of historical trends and a keen awareness of current market conditions. Yet, for those seeking optimism, history provides a strong foundation for continued growth in the year ahead. Remember to watch our 25 predictions for 2025, with interesting and surprising predictions for the new year, and please subscribe to the channel.